Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning September 5th. It's a week of meetings, starting with the G20 leaders meeting yesterday and today, then a Reserve Bank of Australia RBA meeting on Tuesday, a Bank of Canada meeting on Wednesday, the European Central Bank ECB on Thursday, and EU finance ministers and central bankers on Friday and Saturday. Of course, meeting doesn't necessarily mean doing, as the G20 is more of a talking group than a doing group, and none of the central banks is expected to change rates. But still, there'll be a lot to watch. The G20 leaders meet against a background of slowing growth and slowing global trade. The question is, what do they do about it? Watch out for what Germany or Prime Minister Abe have to say in the press conferences afterwards, see if the talks change their minds about using fiscal policy or foreign exchange intervention. The Reserve Bank of Australia, the RBA, cut rates at its last meeting a month ago, and nothing dramatic has happened in the country to force them to cut rates again. I'd expect them to switch to a neutral stance, such as they had in July. That could prove positive for the Australian dollar. The Bank of Canada, too, has no reason to rush. Inflation remains within their target range, and growth is already bouncing back from the fall caused by the wildfires in April. The decision might not have much impact on the Canadian dollar unless they express a strong view one way or the other. The ECB also has little reason to move right now. Since its last meeting on the 27th of July, ECB President Draghi's favorite measure of inflation expectations is down slightly, but other market measures are up, suggesting little change overall in the inflation outlook. I wouldn't expect the meeting to move the euro that much. Now, the indicators from Britain, from the UK, will remain a central focus. So far, they've beat expectations handily, as the Economic Indicator Surprise Index, shown here, demonstrates. That's the red line. This is in contrast to indicators in other major regions, and is a major reason why the pound's doing so as well as it is. Now today, on Monday, we get the UK service sector and composite PMIs. Today's PMIs will probably both have to bounce back above 50 to convince the market that Brexit fears are well and truly over, for now at least, and thereby boost the pound. Other UK data due out this week includes the Halifax House Price Index, industrial production, and visible trade. Now, several other countries will announce their current account or trade data this week as well, including Australia, Japan, and China. China is expected to show a higher surplus, but both exports and imports are expected to fall, although at a slower year-on-year pace. That could be encouraging for risky assets, commodities, and the Australian dollar. The UK trade deficit is expected to narrow significantly, which could further help the pound. As for today, the US and Canada are on holiday, so activity is likely to be thin in the European afternoon. And I won't have a North American opening comment today. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.